Welcome to another edition of the Energy Week podcast. Well, I gotta stop there, Ellen. It's actually the true one and only energy podcast, not the fake one, not the pretender, not the one trying to steal our thunder. The real deal Holyfield Energy Week podcast. Ryan Ray alongside the one and only Dr. Energy herself, Ellen Wald. Ellen, how's it going?
We are the true, the original, the authentic Energy Week podcast, the one that comes out at the beginning of the week.
Yes, that's right. That's right. I saw that on the other day, and I was like, are they? It feels like they're still in our name. It feels like they're still in our name. And
yeah, they are.
Well, that's okay. They can. How's it saying? Often duplicated, never replicated, or something like that, or.
Don't they say that flattery is the sincerest they say that copying is the sincerest form of flattery
or something like that. Yeah, or something like that. Yeah. Well, that's okay. They can give it their go. We got a lot to get into. Quick reminder, we do have the website up, energyweekpodcast.com. So if you have questions, which we do have a listener question this week from Twitter, we're going to take on with Dean Foreman. So if you have a question, Twitter or the website is a good way to get in touch with us. Ellen, we talked last week about some U.S. ships moving over in the Middle East. It seems like the tensions are on a rise now, according to the Wall Street Journal. Saudi oil tankers attacked amid rising tensions in the Gulf. The Strait of Hormuz has been getting its fair share of publicity these past months. Is this the beginning, the middle, or the end?
And so if this is the end, then it was a very, very, very minor conflict. So some interesting things. Apparently, originally, this was all reported as an explosion with between 4 and 10 tankers on fire near Fujairah. Now, okay, where is Fujairah? First, I wish I could just get my map. Actually, it's on the wall, so I'm not going to get up and take it off the wall. But anyway, I make my students memorize a map of the Middle East, and I always tell them that the UAE looks like a banana, because getting the Gulf countries can often be the most difficult, as is easy to attest. It took me a while to learn them. But anyway, the UAE looks like a banana, and sticking out of the Arabian Peninsula. And it's a bunch of different emirates. The biggest and most important ones that we know of are Abu Dhabi and Dubai. But there's another emirate called Fujairah, which is like on the other side of the banana, like on the bottom side of the banana, like down here. And it's actually on the south side of the Straits of Hormuz. So you don't actually have to go, if you're coming like from the Indian Ocean, if you're a tanker coming from the Indian Ocean and you're coming up to the Persian Gulf, you can dock at Fujairah without having to actually transit the Strait of Hormuz, which is this very narrow pathway where basically like you get one ship going one way and one going the other. It's more narrow even than it looks on maps, because there's all these like little islands in there that make it difficult to traverse. So Fujairah has started to become important during the Iran-Iraq war, when there was a lot of fighting going on, and it was a way, you could pick up oil there and not have to deal with all the crap going on in the Persian Gulf. So, and in recent years, the Emirates have basically they invested a lot in the storage facilities there, and they've made it a major bunkering place for oil. So basically, it was announced there was this huge explosion and all these tankers were burning, when in fact there actually was no explosion and no tankers were burning, as our friends at Tanker Trackers told us pretty quickly as they went on the satellites and said, we don't see any fires. We don't see any of this. Then it came out later, the Saudi oil minister said that two of its tankers, or two Saudi tankers, were damaged by sabotage as they were coming into, one of them was apparently supposed to pick up oil that was going to then head to the United States. So Fujairah is important because it can be used to basically bypass having to go into the Persian Gulf and through the Straits of Hormuz. But it's really not clear, like, who did this, if there was any damage. Now they're saying 4 tankers, possibly 2 Norwegian ones. And one of the other sketchy things is that a lot of the reporting has come from Sputnik and RT, 2 of our most trustworthy news sources, right? Like, never in their lives would those 2 sources ever purvey fake news.
Right.
Which reminds me, I just read this, well, I skimmed because it was a really long article in the New York Times about how RT is trying to convince Americans that 5G technology is going to make them all sick and die. Okay. So, so RT
be on the watch out for that 5G.
I know it can cause learning disabilities, cancer, Anyway, so part of the problem is that it's being reported from these sketchy news sites, or I call them media outlets. And we don't really know what happens. Then finally, like Sky News Arabia showed what looked like a fender bender.
Right.
In the Persian Gulf. So I don't know, maybe it is a lot of damage. I don't know much about tankers. I don't know much about shipping. There are no oil spills. Nothing was like that damaged, but I guess maybe a little bump in the hull of a ship is a big deal. But it actually caused oil prices to go up about 1.5%. I think Brent was up 1.5% this morning because of this news. And then I guess people figured, well, I guess nothing's really happening. Iran didn't claim responsibility. They have no idea who did it. The US is now saying, we will help you figure it out in the investigation, but there's no this is an area that is so dense. It could have been an accident. I mean, I don't know, but it's definitely possible that
It's the perfect spot to have a on-purpose accident, if that's
that's great.
It's the perfect spot for that. Well, I just found it interesting because the U.S. is talking about moving ships over there, and then lo and behold, we have the accident, the whatever we're going to call it here. Do we think that maybe the U.S. presence just kind of gets everyone maybe a little bit more on edge than normal, or maybe also provoke people to act a little bit more wilder just because they want to, kind of poke the big bear that's over there now?
It totally could be. It's definitely not. I think it's definitely not a coincidence that it occurred at the same time as the U.S. has just sent more ships over there. I mean, I actually did a little bit of digging into that, and apparently these aircraft carriers were already on there, were going to be deployed there anyway. And so it wasn't like it was a new thing. They just sped up the deployment a little bit. But they portrayed it, at least in the media, and Bolton and everyone portrayed it as we're making this big change, when in fact, it really wasn't. And I kind of suspected that maybe because these kind of deployments you don't just order an aircraft carrier and get to the Middle East now. These are things that are arranged months and months and months in advance. So I'm not surprised, and they just kind of over portrayed it. But okay, say it was a deliberate act of sabotage. Okay, they didn't cause a whole lot of problem, but they definitely raised tensions. They definitely caused, it seems, according to the Saudis, they caused significant damage to 2 of their ships. On the other hand, they didn't really do all that much. Who would it be? Maybe little boats? Is it the Yemeni, the Houthis? Is it the Iranians? Is it Al Qaeda? Is it some rando out for a joyride?
Well, if we remember back last week, Pompeo said that basically if Iran does anything to anyone that the U.S. remotely has any favorable attitude towards, they would consider that basically an act of war. He was saying, so I'm not wanting to put on the Alex Jones tinfoil hat yet, but
you are right-wing propaganda.
Okay. I've owned that though, Ellen. I've owned that. I am propaganda, not conspiracy theorist, propagandist. Anyways, I just found it interesting that hey, here's Pompeo saying this, and I think it's gonna be curious the next week, when we're back here next week talking about it, to see how it shakes out, because he did lay that down basically last week, saying, hey guys, if you hurt us or our buddies or anyone we have deals with, and we're coming after you. And so maybe the Iranians are testing the water there just to see how serious they are, and it could be just an accident.
But that's a really good point. Maybe they're trying to see okay, so you said this, so what do you consider? Is something this minor in your that sounds that I bet you're right.
But right. we will see.
We'll check back.
we'll report back next week with more stories from Sputnik and Infowars. So what's interesting, the subtitle of that article was "The Oil Prices Rose." The next article, "Oil Prices Fall with Wall Street on Trade War. Give back the early rise." This is from Reuters.
Well, that's why I wanted to put both of them in there, because it was interesting how it we get news of new tariffs. So the Dow is in futures. The Dow was down 600 in futures. Yeah. Meanwhile, oil's up almost 2%.
Right.
And then a little while later, now oil's following the Dow.
Right. Yeah. Just on that in general, do you think that this means that the market is getting to a spot now where it's going to be a little bit more reactive to potential news? For so long, news like this wouldn't even bump the needle. Now we're starting to see these headlines more regularly. Are we getting not close to the big, large spikes we've seen historically, but maybe where, a ship gets a dink in it, then all of a sudden we are going to see the prices fluctuate more than normal, I'll say normal over the past 2 or 3 years?
I think it was helped by the fact that it was way blown out of proportion initially, and true. That the UAE responded really quickly saying, there's no fire, but the Saudi response was made it seem a lot worse than it was, or at least than it seemed like it was. And so I think there was a lot of confusion, and I think that the confusion helped push oil prices up, but then suddenly people were like, oh yeah, well, China tariffs, the economy sucks. That's the end of it. So, I think that's really what we're seeing. I do think we're getting more responsive, but it just seems like this trade news just subsumes everything eventually.
Right. Yeah, and that's kind of my thought was you figure the trade news would have been the bigger story. You always have to wonder here when you see these headlines on something like this. Go back to what was the first initial report that the traders got? Was it ship sinking in the Strait of Hormuz? Okay, well that's one thing. Or is it minor scuffle? I would love to see the news and how the reaction from the news, if it's the right ratio of response, or if it's sometimes just a little bit overreaction here. But the China deal, we haven't talked too much about China. Obviously, President Trump announced. He's going to, and I haven't looked. I think it was Friday night it came out, and then he said he's going to increase it 25% more. Okay, so, and I didn't go read any more than I saw the tweet. So is that a 50% total, or is it the additional 25% coming from somewhere else?
I don't know. That's a good question. I don't know.
Because if a 50% tariff total would be a pretty significant tariff. And I thought, surely it's not. Maybe it is, but I just kind of thought, okay, wow, 25%, or I don't know. When Trump tweets, you can't exactly.
Trump tweets are not going to tell you exactly what the tariffs are.
The policy's probably not going to be spelled out in there.
Yeah.
Now, he did say, and I think we talked about this on the show, that he said China believes that they can outweigh him, and hopefully the Democrats win 2020. Something we've theorized on the show, that Democrats should probably use their strategy. I guess the Chinese leadership listened to this podcast and took our advice. Democrats, I don't think, have really responded to that. But do you think that the Chinese trade deal will last all the way to 2020 elections? Or past that if Trump wins?
I don't think so. I think if Trump wins this, basically, then I'd have a hard time seeing him not get reelected if he can come out. If he gets some sort of win and the tariffs are all removed, or most as a result, I don't see. I'd be hard pressed to see him not get reelected. Mm-hmm. So I think that's a pretty good incentive to try to get a deal done. Everyone wants a deal.
Yeah, I guess if I was the Chinese, you'd probably wait until this time next year to kind of see who I'm trying to put the calendar in my head. By this time next year, we'll know the Democratic nominee, right? Because the conventions are in June.
Yeah, no, I don't know. Are we the conventions are usually in August?
Is it that
or far? July?
Okay, so we might not know then.
No, okay, we might not know.
Okay, so but by summer next year, you should have an idea. But my point was, the Chinese got an interesting. If they are going to wait for the re-election, they've got an interesting game to play because if Trump is polling really high through the primaries and whatnot, you almost have to do the deal with him then because if he wins, then I think he said this in his tweets. He's basically going to make it worse. Of course, if Trump's not polling well, you might see this stick out. So if their plan really is to wait for the election, all I'm saying is it seems like they would wait another year just to kind of see what the Democrats are going to do and do they think the Democrats have a decent shot at winning. And I know some of the listeners might be going, well, how would they know? I'm going to guess the Chinese spends a lot of money on following U.S. elections and polling and stuff like that. So,
but it really though, like, I mean, do the Democrats even have a position on this? Like, we don't know what it is. So it's not like with Iran where like a lot of the Democrats have at least publicly stated that they, supported the JCPOA. So when Iran is like, we're going to wait this one out, they at least have a sense of what they'd get with a Democratic president. But I'm not so sure about China.
I'm not so sure right now, but it will come up. You think it would come up through the debates? Surely the tariff talk will be a focus of some of the debates, but stranger things have happened, so you never know. We'll see. Now we've got Dr. Foreman coming on, but we've got a couple Tesla stories we've got to squeeze in before we get off here. I want to start with the baby name one first, but I won't. I'll wait. From CCN, Elon Musk loads up Tesla stock, but car makers' worst enemy is Tesla itself.
Oh, no.
Wow. It's like someone's been saying that for quite some time here. It's good to see Morgan Stanley finally caught up to the show. Didn't make as much news as Tesla doing something like launching a rocket to Pluto or something. But
Pluto's not a planet anymore, so I'm not sure they'd get a whole lot of credit for that.
That's true. R.I.P. Pluto. But listen, this is it feels like, and I've said it before, so who knows? But it feels like the tide's turning on Musk here, and maybe folks are going to start putting him under scrutiny. Some of the stuff, we've got two pieces here, one from CCN and one from the New York Times, and they're both pretty critical of, compared to what you've seen historically at least, of what's going on with Teslas. Do you think maybe the media is finally going to come put more scrutiny on him?
Well, I think the media might be, but I still wonder where the what do we call them, the Tesla-rotties or something? I mean, the people who own and buy and sell the stock, are they ever going to admit it? Not as far as I can tell, and I do sometimes follow them on Twitter to see what they're up to, and they are convinced that Tesla is the money-making stock of the future.
It's interesting. I've heard some really smart people who know Elon, and they have said, this was last year sometime, don't bet against him. He's really smart. And so you do have a sense in which there is some other sentiment that's coming that's saying, this guy's from people who are successful themselves saying, hey, this is a really smart guy. He's going to figure it out. But
he could be a really smart guy, but that doesn't mean that his business is sound.
That's exactly right. I'm not denying he's not a smart guy. He seems like a smart guy. But it just doesn't feel like this is going to work. And it feels like, I don't know. I'll just leave it with this. I think if it does go worst case scenario and the stock plummets and people lose their money, you can blame Elon for trying to pump the stock up because he's a cheerleader of his own company. That's fine, but there's plenty of analysts that got to take that need to come out and take the L because they have overinflated the stock for a long period of time, in my opinion, and really sold a bad bill of goods. Elon pulls it off. Kudos to him, but it feels like Elon's going to be left to be the only bad guy in this, and I think there's plenty of blame to go around.
Oh, I completely agree. Everyone who either asked people, any analyst who didn't ask a real question on those Tesla earnings calls deserves to I don't know, be transferred to industrials or medical supply or something like that, because you can't get suckered in. Just because it's a sexy company and Elon Musk is weird and bizarre and wears sunglasses that you like doesn't mean that absolves you of asking tough questions.
That's true. And just to kind of put it in perspective, this is according to the New York Times. Tesla needs more money, a lot of it, after a Now, I found this interesting. After a surprisingly weak first quarter, in which it burned through nearly $1 billion, the company said Thursday that it would seek to raise about $2 billion in the markets. That's $3 billion, right? So
Yeah,
$3 billion. Okay. Well, Chevron's got an extra billion laying around, so maybe they can get some money from them. I don't know. Okay, final story before Dr. Foreman comes on. From Fox Business, Elon Musk's Tesla among car-inspired baby names of 2018. Now, I got to say, I got to chuckle at the story. But there are babies, at least, I don't know about now, but there were for a while, named ESPN, ESPN. So, I have seen the fan culture.
So, did you ever read the book Ramona Quimby, or read it to your kids, or had your kids read it? So, by Beverly Cleary. So, Ramona had a doll who she named Chevrolet because she liked the way the name sounded. But that was her doll. Apparently, 109 babies this year in the United States were named Tesla. That's actually down from 143 in 2017. Which is kind of funny because, okay, so like I assume that the car company is named after the scientist Nikola Tesla, who was like a scientist a long time ago. So, like that's not like it was a name; it was a last name. I think it's apparently the name is of Slavic, Serbian, and Croatian origin. That means from Thessaly, and it's most commonly a girl's name. I did actually read a book recently. It was a fantasy novel where there was a character in the book was named Tesla, but I think it was spelled with 2 S's. But
this reminded me of something else, and I just pulled it up while we're talking here. So when Star Wars, I guess it was 7 came out. I don't know if you watched the Star Wars movie or not. So Kylo Ren and Rey are the 2 main characters. Kylo, obviously the bad guy, rather. 238 Social Security card applicants named Kylo were born in 2016. This is from May of 2017 from the LA Times. I always found that interesting that you named your kid after the villain. Like, maybe Kylo has...
Could be redeemed.
Yeah, maybe Kylo is redeemed. Maybe he's not, but it's a bold strategy to go ahead and name him before the narrative is set. Like, once the canon's done and it's closed, okay, but... if he turns out...
We're named Vader.
I don't know, but I'm sure there's probably a few Anakins out there. Probably a couple Anakins. I don't know if any Vaders, but yeah, so Tesla, if you want to name your kid Tesla. Energy Week, Energy-Week, or first name Energy, middle name Week, if you really love the show. I guess that's acceptable. We'll take that praise. Okay, before Dr. Foreman hops on here, let's go ahead and talk about where we will be later this week.
I'm going to be on Forbes with a piece kind of going over what's been happening in the Persian Gulf, and I may make some updates to that as events unfold. So check that out. I'll put that in the show notes. I'll be on investing.com as always. And I think so far that's it. Okay.
Texas Oil and Gas Podcast, Oil and Gas Contractors Connect Podcast. And then I will be at the Doug Rockies. I'm flying out tonight, so I'll be there Tuesday and Wednesday up in Denver. So any of our Denver listeners there, just hit me up on LinkedIn or Twitter or somewhere you can find me. And I got a few listener meetings actually set up already. So some of the Texas Oil and Gas Podcast folks will be up there. So that should be fun. And then we may or may not be back next week. Ellen has some potential stuff that might derail us. We will be taking off Memorial Day week, mainly because Nate's taking a vacation, and he said he don't want to work on vacation. I don't know how that works, but whatever. Ellen, I got thinking, historically, when we have not done the show, all hell is broken loose. So even though Memorial Day is a holiday, the listeners probably should be prepared for something bizarre to happen.
Something will happen, and my period of being on call for federal jury duty will be over by that point. So I will be all over it on Twitter if it's happening, whatever is happening.
Up next, we have Dr. Dean Foreman, the chief economist for the API. Be sure to check out their monthly reports and everything at api.org. We will link to that in the show note. This report will be coming out on Thursday, which is the 16th. So be sure to go to the website, check it out. Dr. Foreman, it's good to have you back on the show. How are you doing, sir?
Doing great. Thanks for having me again.
Okay, we had a listener question come in from probably the smartest fan we have. It's a Man United fan, and so those are always really smart chaps. And he sent it to me and Ellen on Twitter, and it says, nice discussions. I don't remember the original context of what was going on there, but he asked if Ellen and I can discuss the enormous inventory build that we have seen, this would be 2 weeks ago, from the EIA, and why the refineries are lacking behind the process to process all that inventory when summer is about to start. So this is about, I think, 2 weeks old is when this question came in, but we said, you know what, we got the man coming on himself, Dr. Foreman. We'll just let him answer it much better than we can.
Okay. Well, there are a few moving pieces to this. The first is that we're producing a lot of crude oil. So, record again this last month of 12.1 million barrels per day, plus another roughly 4.7 million barrels per day of natural gas liquids. That's a ton. And on top of this, the exports of crude oil. And keep in mind what's happening on the international front, where these waivers that have been issued for international companies to purchase Iranian crude oil, those expired on May 2nd. So as you can imagine, a lot of people were rushing probably to get under the wire for that. And in the process, that probably led to less international demand for U.S. crude oil. So the fact that we're producing a lot and we're not exporting as much of it in April, basically that's turned into more inventories. So on a weekly basis, keep in mind that it's not the same every week. We had some big builds, but over the month, when we look in the monthly statistical report, we're taking the weeklies and aggregating up to the monthly level. It looks like there was a build, and that's okay. The overall inventories between crude and refined products are in a reasonable range. They've gone up. The overall inventories are kind of flat. So we've had a build on the crude side and a little bit of a drawdown on the refined product side. And it's working. The market's working the way it should. So if we see everything on the geopolitical side sort out over the coming months, hopefully this will normalize.
Okay. We are, as we mentioned, having you on to talk about the Monthly Statistical Report, which is volume 43, number 4, which we published on May 16th. We get the advanced copy every month, which we are very thankful for because we're just, we're cool like that. So thank you for that. I wanted to start with this. We talked about a few months ago when the plane crash happened. We said, well, we asked you what might happen. You said there's a lot of groundings. We've kind of followed that narrative. That story, I haven't seen a lot of headlines. I kind of see some updates about maybe what's going on with the investigation. But looking back now, has this kind of played out with the jet fuel demand with all we know now is kind of how you predicted on the show? Maybe there's some things that we learned that we didn't see coming because it feels like that story, at least from what you read in the headlines, is kind of washed out. Or are we still seeing some side effects and some things to look for, even though the news coverage may not be focusing on it?
Well, what's interesting is the bobbing and weaving of how that's gone, where the knee-jerk was you've grounded a lot of planes and you had fewer flights, and you had some airlines that were not in distress, but concerned about the direction of how they were going to carry about their normal operations. And you had a couple of carriers in particular with a lot of these grounded planes. Well, as you've been reading maybe some of the headlines about, well, what are they doing to work around that? Many of them are, taking older craft out of the fleet that aren't those particular planes, and they're a little bit less efficient. So whereas grounded flights maybe led to less demand in month 1 and month 2, for April, we actually see an uptick in really strong demand again for not just jet fuel, but when we read through the International Air Transportation Association, we can see that the demand for travel as a whole has remained pretty strong. So that corroborates really with what you see actually all the way to the job numbers, that consumers are still in relatively good shape. They've got good sentiment. Now, there is a bit of a divergence. We see on the industrial side maybe some slowing and concerns, especially with the trade frictions maybe biting a bit. But consumers as a whole, voting their pocketbook, really saying that they feel pretty good about the economy, they've continued to travel, and that's showing up in the airline numbers.
That leads in really well to the point that really stood out for me very strongly, which was the strong gasoline demand that the report says indicates good consumer confidence, but also falling distillate demand indicating industrial weakness. And you mentioned that this is probably likely due to insecurity over the trade wars. But I'm curious at what point will, how long can these two things diverge, or how big of a divergence could we expect to see before either consumer demand is affected or there's some sort of rebound in the industrials?
It's interesting. 1 month doesn't a trend make, and we may or may not see a trend actually form out of this. But it was interesting in April that we saw this, relatively strong consumer-driven, gasoline demand at record levels for the month of April, and then the distillate side, which is diesel fuel used both in freight transportation and industrial uses, really lagging behind. So with that, if that corroborates a lot of other things that we're seeing in indicators, other economic indicators of industrial production slowing. So, if we look, for example, at the Institute of Supply Management's Purchasing Managers Index, it would say that whereas almost all of the industries were growing back in March, just month to month, you're down to 13 of the 18 that they survey, only 13 of the 18, so many fewer continuing to expand. So if that continues, we would expect to see this embed in month after month become a bit of a trend. We have to take seasonality out of it as well, and keep in mind that we're stocking up, and we've got this changeover to summer fuel specifications, reformulated gasoline. So that also will tweak a little bit with the numbers. And also, it was embedded in the jet fuel a bit, but also travel numbers as a whole for gasoline, where the Easter holiday fell a bit later this year. So that also was another factor in the April numbers. So watch this space. We'll see what happens. But we've got a few different moving pieces going on.
I'm looking at the EIA's U.S. exports to China of crude oil and petroleum products. I notice in your note here, it says that the U.S. exports crude and refined products hit a record for the month of April at 7.8 million barrels per day. You mentioned the trade war, and it might be getting resolved, might not. I know you guys can't make predictions, but just looking back historically, how much of a shift would this be? Is if we did get this deal, if President Trump gets this deal done with China, if we're hitting records now, what might just again from using historical data we see moving forward once that deal is in place or finished or finalized, or however you want to put that?
It's a tremendous opportunity for not just this industry, but the United States as a whole to have the clouds clear over the trade frictions. Everything from also the North American trade situation, as well as the tariff dispute with China. And as that goes, it's becoming a double-edged sword in the sense that we're building into this more separated environment, if you will, where we're looking at on one hand at the possibility of perhaps will the U.S.-Mexico agreement pass? That's one. Are you left with or without NAFTA? That's a pretty stark difference, and it has big supply chain implications for our industry if it goes that direction. On China, it looks like China's doubling down with just now actually raising the tariff on U.S. LNG exports to China from 10% to 25%. In terms of, and we've discussed in the past that liquefied natural gas, or LNG, is a much more immature market compared to the deep liquid and many buyers and sellers market that you have with global oil. And so much of the demand growth for LNG from the U.S. is concentrated in China and developing Asia. So if you start putting a 25% tariff on that, that really can be a significant deterrent to growing U.S. LNG into that country and maybe the region as a whole. The other thing that's really important for that particular industry is that you have to have a trustful or trusted trade relationship between the partners to underpin these really long-term, multi-billion-dollar commercial contracts. And right now in this environment, it's kind of going the opposite direction. So look, these clouds can clear and they may clear, but right now there's actually quite high stakes hanging in the balance. We need to see where it goes.
So tagging along on that trade issue, I was looking at the destinations for U.S. crude exports. I think they came out, the ones from March were released. And it was very interesting to see the number of destinations in Asia for U.S. crude that were not China. And yes. China was on there, but I believe that India was, first of all, nearly as high. The amount of oil being exported to India was almost as high as the amount being exported to Canada, which I thought was a huge, that's a very big change. But then we also had South Korea, Japan, Thailand, and I think there was one other that I can't remember, in addition to China. So I'm wondering, is China is clearly an important market. I mean, you can't deny it, but it does seem that maybe that U.S. exports are finding homes in other parts of Asia. Can we expect that to maybe increase as these tariffs are increasing, or is there room? Does this indicate that there's room for diversification in terms of U.S. exports to Asia?
Ellen, that's a great question, and the answer is somewhat different for oil and refined products than it is for natural gas or LNG. On the oil side, as you just cited, that's exactly the way the markets worked. And if we compared the data back to mid last year, and really, I guess June, when China was buying $1 billion worth of U.S. Crude oil and refined products every month, then China looked relatively more important than India and others today. And as China got into this trade dispute, they basically cut by August their purchases to zero. And it's come back a little bit, but it's pretty minuscule in the scheme of things. But the way global oil works is it really doesn't matter. As long as there's global demand, those barrels have to come from somewhere. So, okay, they buy their crude oil from Iran or Saudi Arabia or another supplier, but the barrel that they bought there is a barrel that didn't go somewhere else. So you come back to the economics 101, supply, demand, marginal cost, kind of setting you have a marginal barrel from somewhere, which right now is likely the United States. We're finding homes for it in other countries that have a demand for that crude oil and those refined products. On the gas side, it's different because this really is a market that's growing in large chunks for the first time. And the whole evolution of that market is really path dependent and depends on, frankly, utilities in these emerging nations investing in the infrastructure that they need, the power plants, as well as the pipelines to take advantage of natural gas instead of burning coal. So there's environmental progress hanging in the balance. There's the economic model of being able to replicate in LNG, something that's similar to the kind of deep liquid market we've seen in oil. That, I would argue, is somewhat different, and it won't just naturally happen. If you put a 25% cost disadvantage on the feedstock, when that feedstock is basically advantaged, it's almost what's called stranded gas in places like Qatar or Mozambique, where you have huge gas finds that can be produced at a reasonable cost, and the feedstock itself is relatively inexpensive, but the cost to build the infrastructure and get it globally in a place where there's very little population density, very little existing infrastructure, you need to build a port and a jetty and everything just to make it all happen. And electricity supply from soup to nuts, everything that goes with one of these large projects. It takes a lot, and it takes a long time to build that, but it becomes more worthwhile to do that if you start saying, okay, on a marginal cost basis, instead of maybe 50 cents per million BTU for the gas, right now a market price is around $2.50 per million BTU, which is still really low historically for the United States. But if you start now putting a 25% cost disadvantage on top of the whole cost of LNG, and LNG has been trading anywhere into Asia from recently lows of $6 and $7 per million BTU, but more historically on average above 10. A couple of dollars difference in terms of the price going into Asia really affects the potential demand in an area where the willingness and ability to purchase it matters quite a lot.
So I may be betraying some of my ignorance in terms of the LNG markets, but so it seems like what we're talking about is that there isn't really a relationship there, and this is going to prevent one from being established. But one of the things that I mean, I did, if I'm remembering correctly, from several years ago when they were first getting started trying to build these LNG export terminals in the United States, they were initially built as import terminals, only then we started to have massive supplies of natural gas in the country, and they were trying to configure them to be export terminals. And part of the issue, if I remember, was the fact that these export terminals needed to get special permits from the government to export their gas to countries that that the U.S. did not have free trade agreements with, particularly Asian countries, which was where the demand was. So are we saying that they've all got these permits now to export to China, and the issue is that China's not that there's concern over whether or not they can sign these long-term contracts, or and this is kind of maybe a different issue altogether, but if they're not finding customers in China, is there potential to send this LNG, or to have customers, or to establish relationships with customers in Europe who are looking to diversify their supply of Russian gas?
You're asking fantastic questions in the sense that it's exactly the trade-off the industry is really looking at. Historically, the permitting process has been one of the hang-ups in trying to move things forward. And recently, the Federal Energy Regulatory Commission, FERC, has made some progress in moving, just this year recently, several of those permits forward. And it requires, as I think you were referencing, dual permitting between FERC and the Department of Energy in terms of being able to move this forward. Once they're permitted, then the market has to sort out which ones will go. And making a project go requires having a buyer, so a contract for it, having the financing to make it go. And some, if they're very large companies, can finance it off their balance sheet. Others are using third-party financing to do that. And others have a different business model where they're effectively using that contract to go to the bank, set up effectively what's called a tolling arrangement, where they're basically renting out the capacity, and suppliers that have a choice of whether to put gas through, and there's a take or pay clause, so they can use it or not use it. But if they don't use it, then there's some charge that goes with that. If you're going to Asia with it, right now it's a commercial negotiation to make that happen. And China is the prime market, though there are others in Asia that can take and will take. Europe is interesting, and we've had some discussions recently with media, for example, in Germany, as Germany's been opening up LNG, or permitting the ability to do LNG imports and diversify off of off of Russian gas at the same time, as they're under some political pressure to try to close the trade surplus that they have with the United States. There is a lot of opportunity to put more LNG into Europe, but it's gas-on-gas competition, because there you have domestic supply of gas, you have Russian gas, you have North African gas coming in by pipeline, and now you have increasingly LNG, plus some gas from the North Sea and other domestic, continental domestic sources. So it's more of a zero-sum game, because the demand isn't growing rapidly there. It's really about just competing against other supplies, whereas in Asia, it truly is tremendous growth of the overall energy market and the ability to supplant coal due to environmental imperatives. So different markets, and that's part of why, because there is the potential to do both and fight in different markets across the globe, that it really is an exciting market for natural gas globally.
Thank you for that. I did have one other, moving to refined products. One of the interesting things that you remarked on in the report was that refinery capacity utilization was on the low end in the month of April, mostly because of outages. And I was wondering if that had anything to do with the particularly high gasoline prices we saw in California. We all know that California generally has the highest gasoline prices in the nation. I guess, other than Hawaii. But has there been particular problems with the refineries there? Was that contributing to the national average, or has this kind of been more across the board in the United States?
Great question. I'd have to look at the specific numbers for the Petroleum Administration district out on the West Coast specifically to give you a complete answer on that. But my gut is that, especially as you go into the summer, California has very specific requirements for its fuel specifications. So if you're a refiner much outside of California, it's not like conventional gasoline that's almost fungible across the United States. So the supply and the demand of it tends to have accentuated movements because of that, coupled with the high taxes that the state puts on top of it. So that's part of California's issue with it. In general, it really has been interesting what's happening with refinery utilization as a whole, because if we went back to this time last year, there were very few, in fact, very low outages relative to history. And here we are sitting above 1 million barrels per day of outages as of this last month. That's probably closer to normal for it, where some are in or some are out, and maybe we just enjoyed a perfect storm of goodness in terms of the reliability this last year. But I have to think that some of this is the inability to run cokers and crackers, the relatively more complex refining units, as the heavy oil, and this gets into different grades of oil, from a listener perspective, of the only two heavy oils that are kind of comparable come from Venezuela and Canada in terms of just how heavy or tar-like they can be. And if you're not getting it from Venezuela and their productions continue to decline, then we have in fact gotten more from Canada, but not enough to completely offset it. That means somebody geographically in the United States has refinery units that are idled as a result of that.
Now that's a really interesting point, because kind of I think the narrative that we've kind of been fed is that, oh, well, we cut out Venezuela's oil exports to the U.S. and everything's all fine. But I think that this clearly shows that everything's not all fine, and that this is really an area to keep an eye on as these sanctions against the Venezuelan oil industry continue, because it's definitely. I think we will continue to see this as an issue, and people have been talking about this, crude quality matters issue a lot online. But if it's showing up already in terms of refinery utilization, then that's a real issue. And that's not really coming out in the narrative that we're seeing, I think, in terms of just prices.
It's a great point. And I think whether we are talking about the refinery issue or talking about the offset where total inventories look good, but then you're seeing the big uptick in crude oil like we started talking about today, but then the drawdown on refined products, or we start talking about the mix between gasoline demand is strong but distillate is weak. It's a month of divergences, if you will, as a theme of kind of seeing the top line numbers look pretty solid, but there are some things below the surface where you're right, we just have to really watch because they're interesting potential trends.
One more question for you before we get out of here. We're up against the clock. Petroleum imports. You said this is, quote, total U.S. imports were the dominant change in April with an increase of 12.1% from March. We've talked some about what's going on with the refineries and whatnot. Is that linked to that, or is this a different issue altogether while we're seeing such an increase in imports?
Demand has been strong, starting with that, and then the supply and demand of kind of matching things both geographically in the U.S. I mean, there's certain parts, like if you're up in New York, New England, where you're almost invariably going to take some imports this time of year of certain spec gasoline coming in maybe from Europe. That would be a normal seasonal trade pattern. So some of this, and we actually had to go back and double check our numbers because the rise in imports was so stark. But it's real, and it was mixed between crude oil and refined products. So it's not just one thing that you can point to. And that says that refiners have very specific needs for crude oil and geographic needs based on what they can transport. So the need for infrastructure and that flow of product and crude oil is equally important. But then on the product side, it says that we also have certain geographic needs in the U.S. This is what helps keep prices low for consumers. And at the end of the day, this is the way the market works. And it's not, from a high level, so easily understood because it becomes a relatively complex thing to talk about. Well, why in this era of abundance for crude oil does the import and export story for the U.S. continue? It does because we have a strong demand, and this is where we can most economically get the supplies.
Okay, Dr. Foreman, anything that we did not touch on in the report? I know there's a lot there we did not get to, but anything specifically that you may want to highlight for the listeners for when it comes out on Thursday?
The one thing that's new that we've added this year is this distillate economic indicator. This is API's new, we call it the DEI, the distillate economic indicator. And it's designed to have a forward-looking tracking with industrial production with fidelity that's somewhat higher than the economic indicators that are otherwise available out there. And we've been publishing this since December as part of this monthly report, and 5 months in a row, it's been spot on. It's really establishing a good track record, and it should based on the way it's carefully designed. But this is something, if you're into economic indicators and trying to see, get a beat on what's happening on the industrial side of the economy and prospectively economic growth that goes with that, this is a really good thing to get a beat on.
Okay, and I'm looking at the website. Is that linked separately that we can link to that in the show notes, or is it just in the report? You got to get it from there.
It's in the report, and so we highlight a chart in the report that has the value and the discussion of this each month right now.
Okay. All right. Good enough. Okay. Well, Dr. Foreman, it was great as always to have you on for the month of May. Look forward to hopefully getting you on back in June. Anything else before we get you out of here?
I think that covers it. Thanks so much for another great conversation.
Okay, thank you, Dr. Foreman. And again, API.org, you can see Chief Economist on the top right and between API careers and contacts. Of course, we'll link to this in the show notes so the listeners can go check it out. Dr. Foreman, thank you for coming on, and we will talk to you next month.
Excellent. Thanks so much.
Thanks again to Dr. Foreman for coming on. Ellen, we've already talked about everything we need to talk about, so let's just say goodbye until next week, unless Ellen gets called for jury duty. If she has jury duty next week, we won't be back until June, so hopefully we'll be back next week. Ellen,
I hope so too, because I have no desire to go down to the courthouse.
Oh, real quick, give us the plane update. Did they get the plane out the river?
Oh my God, you know what? I don't know. They stopped covering it on the morning news. I usually watch the local news when I'm at the gym in the morning, and you know what? It has not been covered. I have no idea if they got the plane out of the river. I'm going to have to drive by there now and check it out. Maybe we'll post pictures in the show notes next time.
Yeah, or maybe you'll tweet about it at Energize Economy.
Exactly. And you can go on my Twitter feed where I specifically posted that article about the baby names, and you can nominate your favorite energy-related baby name, and we'll see if any of them makes it onto the list in 2019.
Okay. All right. We will go do that. Listeners, thank you so much for tuning in. Helen,
Piper, by the way, is already leading.
Oh, Piper's not leading. There we go. I
totally qualify as an energy-related baby name.
It could. Now that you say that, it actually could. So, all right, listeners, thank you so much for tuning in, and we'll talk to you next week.
Bye.